Hey everybody, this is Courtney at Village Wealth Advisors. And when you're ready to retire, we're the ones to hire. I've been working with retirees for almost 20 years now. And one of the questions I've been getting a lot lately is, when is the next recession coming? Yeah, I don't know if you realize it, but it's been 18 years from the last real recession. The last real recession we had was the Great Recession in 2008, right? When the financial sector broke. We had to do quantitative easing. We had to pull ourselves back from the brink. A lot of us thought at the time this might be the beginning of the next Great Depression, but we did manage to pull ourselves out. So it's been 18 years since that crisis, since the breaking of the housing market broke the financial system, and we went through a lot of pain and suffering. Now, we did technically have a recession during COVID, where there were 2 consecutive quarters of a shrinking economy, negative GDP growth. But that really didn't have the cleansing fire characteristics that really make a recession a healthy part of the economic cycle. See, when we go through a recession, some businesses are going to go out of business, and it tends to be the businesses who are using obsolete business models. They go out of business and they make space in the economy for new, better, more innovative business models to emerge and grow. We haven't had that in the last 18 years. And so instead, what we see a whole lot more of are mega mergers, consolidation in industries where the biggest companies in an industry are just swallowing up everybody smaller than them, creating barriers to competition rather than the cleansing fire creating opportunity for growth. So in the next recession, whenever it comes, which in the next few years very well could likely come, hopefully it won't be a breaking of the economy. It'll be the cleansing fire characteristics, creating opportunity for new companies to emerge, good investment opportunities to buy low for long-term growth. The key to look for in the next recession is there a sector of the economy that is going to break, that's going to have a contagion effect on other areas of the economy? So think of yourselves as an entrepreneur for a second. Collectively, if the majority of the entrepreneurs in this country are looking at the future going, I think my business is likely to grow, then they will invest in growth in their company. They'll hire people, they'll buy machinery, they'll rent additional space. All of those decisions are growth creating decisions. Now, what happens in a recession is collectively those entrepreneurs start making decisions not to invest in growth. Instead, they look ahead 2-3 years and go, you know what? My business might not grow. My business might shrink or stay the same. Instead of hiring that next person or buying that next piece of machinery or leasing more space, I'm going to keep more cash on hand. And so when one entrepreneur does that, it has a tiny little impact. When 100 entrepreneurs do it, it has a little bigger impact. When thousands of entrepreneurs do it, we have a recession. And that's okay. That's part of the cycle. But when an area of the economy, like the housing market, or maybe this time around, AI tech companies, when all of a sudden they stop making decisions to invest in growth, the dollar amounts are much bigger. And that's what can create a bubble popping, breaking of the economy, busting of the economy. What we want to look for is how invested and how enmeshed are the financial sectors of our economy with the exposure to that bubble, okay? Now, up until very recently, it hasn't been that big of a deal because most of the investment has been on the stock side. But one of the big pieces of news lately has been the tech bonds that have been being issued for decades out. If the financial sector starts being overinvested in these fixed income instruments, that can be part of the contagion. The other part of the contagion that I'm looking for is cryptocurrency. I am not a believer in cryptocurrency, and I believe that the next recession is probably going to do away with the cryptocurrency market. If our financial sector is overexposed to cryptocurrency and it does go bust, okay, that is the type of thing that could break the financial system and turn the next recession into a bust rather than just a normal cleansing recession. But what is that going to feel like for you as you're going through it? Well, part of it depends on what phase of life you're in and what your portfolio might look like. Because in a typical normal recession, you would expect to see stocks overall, think S&P 500. Those stock prices drop temporarily, anywhere from 25 to 35%. In a breaking type of recession, a la the Great Recession or even COVID, we saw stock prices drop more in the 40 to 50% range. But that's not what you would expect from a normal recession. Now, if you're like a lot of my clients and you're in that retirement phase of life and you have a more diversified, balanced portfolio, what you could expect is a drop in your portfolio value of anywhere from 15 to 25%. That's the most likely reasonable expectation. Now, that 15 to 25%, when the numbers start getting really big, starts getting really scary. But you need to have faith that recessions are a part of the economic cycle. And by definition, a cycle is going to recover, cycle from drop through bear market, through recession, into recovery and into expansion. And so it will take anywhere from 3 to 5 years for the market and your portfolio to reach a new all-time high. Now, the COVID recession, one of the reasons I don't really consider it a real recession is because the recovery was so quick. It only took like 6 to 12 months for us to reach new all-time highs. And it didn't have a lot of the cleansing characteristics of a recession. But the Great Recession took about 5 years for portfolios and stocks to reach a new all-time high. The tech bubble bursting recession of the 2000s, that took even longer. That took 7 years for the stock market to hit a new all-time high because the stock market had become so concentrated with tech stocks. Now you might say, gosh, that kind of feels like what we're going through today. That's where diversification becomes such an important role in your portfolio recovery. You want to make sure that you don't become too concentrated in the area of the market that might be overvalued, so that as we go through the next cycle, it's not taking you 7 years to reach a new all-time high. You're still achieving that new all-time high in something more reasonable like the 3 to 5 year part. That's how my retiree clients are going to ride out the next recession like they've ridden out past bear markets. Diversification is key. Thanks for your time today. I hope you found this information interesting and helpful. But if you have more questions on how these topics impact you specifically, please reach out to us. This is my passion, this is my love, and my entire team here at Village Wealth Advisors is here to answer your questions and help you make those big financial decisions. Because at Village Wealth Advisors, when you're ready to retire, we're the ones to hire. Thanks.